All right, when you think about exciting, market-beating stocks, what jumps to mind? I'm guessing tech, AI, maybe some cutting-edge biotech, right? But what if I told you that some of the biggest winners are actually hiding in plain sight in what might be one of the most overlooked sectors out there? Let's dive into this really surprising story.
I mean, let's just be honest with each other. The business of distributing medical supplies, it sounds, well, kind of dull, doesn't it? We're talking about companies with razor-thin margins, moving massive volumes of products, always under pressure. It's not exactly the kind of thing you bring up to sound interesting at a party. But is that perception actually matching the reality?
Not even close. I mean, look at these numbers. This is what's so incredible. Over the past year, Cardinal Health is up a whopping 66%. Cencora, up over 42%. And McKesson is right there with them at nearly 40%. These aren't just, good returns. They are absolutely crushing the market. To put that into perspective, the S&P 500 was up about 24% in that same time. These guys are more than doubling.
And that brings us to the central puzzle here. We're in a tough economic environment, right? High interest rates, inflation. You'd think these logistics-heavy businesses would be getting squeezed. So how in the world are they pulling this off? What is going on?
That is the big question, and that's exactly what we're going to unpack. It turns out this isn't about getting lucky with the economy. It's really a masterclass in strategy and execution. So let's break down how each of these quiet giants is absolutely winning the game.
Okay, first up, let's talk about Cardinal Health. This company is in the middle of a seriously impressive turnaround story. And they're showing that this isn't just a small fix in one area. The improvement is happening everywhere. And this number right here, it just perfectly captures their momentum. A 22% jump in revenue in a single year, hitting $64 billion for the quarter. Now, in an industry that's known for slow and steady, that kind of top-line explosion is a massive signal that their strategy is working, and it's working fast. So how are they doing it? Well, the growth is across the board. Double-digit earnings growth in every single segment. A huge driver is the strong demand for pharmaceuticals, especially those new GLP-1 drugs. Yep, the popular weight loss drugs you've been hearing about everywhere. But here's the key. They're making a strategic push into higher-margin specialty areas like biopharma. That's where they handle complex, expensive drugs for things like cancer. That's what's positioning them for the future. And here's the payoff. That growth isn't just some number on a spreadsheet. It's translating into cold, hard cash, generating $1.3 billion in free cash flow in just 3 months. That's a testament to their operational muscle. That's cash they can use to pay down debt, buy back stock, or fuel even more growth.
Okay, let's shift gears to our next company, McKesson. If Cardinal Health is the comeback kid, McKesson is the gold standard in just pure execution. They really show what's possible when you combine massive scale with incredible discipline.
Just look at this number, a 39% surge in adjusted earnings per share. That's not just growth, it's a dramatic ramp-up in profitability. It shows just how incredibly well they are running their business, turning every single dollar of revenue into real profit for shareholders. Their secret is kind of like a two-pronged attack. On one side, their oncology and multispecialty business is just on fire, with profits soaring an incredible 71%. Then, on the other side, they are constantly tweaking and improving their core business, using smart investments in things like automation to boost efficiency and protect those slim margins. It's a really powerful combination. And the financial results, they speak for themselves. $2.2 billion in free cash flow in a single quarter. That is a staggering amount of cash. It gives them immense flexibility to reinvest, make strategic acquisitions, and return a ton of value to their shareholders.
And finally, let's look at our third winner, Cencora. Their story really highlights the power of having a super focused strategy, specifically targeting the high-growth world of specialty pharmaceuticals.
A 20% jump in operating income is a direct result of that intense focus. It shows that by concentrating on the most complex and valuable part of the market, they can drive serious profitability. Get this, they did it even after losing a major pharmacy chain as a customer. Now that is resilience.
So the key takeaway here is both their resilience and their foresight. Their strength in the specialty market was enough to power through a major business loss. And they are not sitting still. They're playing the long game, investing $1 billion to build out the infrastructure they need to dominate this complex market for years to come.
And that strategy? It is incredibly lucrative. Cencora generated $3 billion in adjusted free cash flow for the full fiscal year. This completes the trifecta:
All three of these companies are just absolute cash-generating machines. So we've seen the incredible performance from Cardinal Health, McKesson, and Cencora. Now let's put it all together and figure out the core principles. What is the actual winning formula here?
This quote from the source material really just nails it. In other words, a powerful business model can weather pretty much any economic storm. These companies aren't just getting lucky or riding some temporary wave, they're built to win, period.
So, what's the secret sauce for success in this so-called boring industry? When you boil it all down, it really comes down to three key things. First, using their massive scale to be ruthlessly efficient. Second, strategically focusing on that high-growth, high-margin specialty market. And third, the glue that holds it all together is just flawless execution and super disciplined financial management.
And this brings us right back to where we started. The big takeaway is simple. You should never, ever judge a business by how exciting it sounds. These supposedly boring companies are living proof that when the fundamentals, scale, strategy, and execution are solid, the shareholder returns can be anything but boring. So, that leaves us with a really fascinating question to chew on. If this is happening in medical supplies, what other overlooked, boring industries out there might be hiding the next wave of these quiet market beaters? Something to think about.